What's up guys? Today the focus of my presentation is as followed. First, what was the dot-com bubble? Second, is the current tech bubble about to burst again? Finally, what action we need to take to respond to current market situations. Are you ready? Let's begin. First of all, what was the dot-com bubble? The dot-com bubble was a rapid rise in US equity valuations fueled by investments in internet-based companies in the late 1990s. During the dot-com bubble, the value of markets grew exponentially. As you can see in the chart, Nasdaq index rose from 0.1000 to 5,000 between year 1995 and 2000. Investors poured into internet startups during the 1990s in the hope that those companies would one day become profitable. However, companies that had yet to generate revenue profits went to market with IPO. That saw their prices triple and quadruple in just one day, creating a fitting frenzy for investors. March 10, 2000, the Nasdaq index peaked at 5,048, nearly double over the prior year. But right at the market's peak, several leading high-tech companies such as Dell and Cisco placed huge orders on their stocks, sparking panic selling among investors. Within a few weeks, the stock market lost 10% of its value. As investment capital began to dry up, so did the lifeblood of cash-strapped dot-com companies. Dot-com companies that had reached market capitalization in the hundreds of millions of dollars became worthless within a matter of months. By the end of 2001, a majority of publicly traded dot-com companies folded and trillions of dollars of investment capital evaporated. As you can see, the Nasdaq dropped 82% from its bottom to its peak earlier the beginning of September, but took a dip by 12%. Current stock market drop was a reminder to investors that nothing about 2020 is going to be easy. So my question is the current tech bubble about to burst again? Here we have the chart that shows the difference between dot-com bubble and current tech bubble. First of all, during the dot-com era, the Nasdaq Composite's price to earnings valuation ran up as high as 200. By comparison, the estimated 2020 PER by Bloomberg is only 31. Second, regarding growth, like I said, companies that generate neither revenue nor profits went to market with IPO. However, tech stocks today are shown to be successful and profitable. For example, second quarter revenue of Amazon increased by 40% compared to the past year. We're unlikely to see a crash on the order of the dot-com burst, but the current economy is still fragile due to the fear of coronavirus spread and president election in November. So I would like to come up with a better idea that action we need to take to respond to current market situations. First, the best thing for investors to do is to stay invested and own high-quality stocks, especially those with competitive advantages that offer tremendous growth potential or reliable profits. Second, increase cash portions so that we can purchase more valuable stocks if tech stocks do crash. Even if tech stocks do crash, over the long run, history has shown that they'll recover and climb to greater heights. Here we have the chart that shows my portfolio as of September 18th. 5 shares of Zoom Video, 20 shares of TSM, 3 shares of Alibaba, 1 share of BlackRock, 1 share of Google, and 5 shares of Facebook are newly included in my portfolio. I'll share my investment ideas in the next time. Today I've discussed about the difference between dot-com bubble and current tech bubble. Next time, we're going to look at GDP, which stands for Gross Domestic Product, and my investment ideas for overseas stocks.